Well, good morning, traders. Welcome to followmetrades.com Saturday scanning, where we're going to be looking for some great trades this morning. I'm Dean Jenkins, founder of followmetrades.com, and I welcome you. I'm glad to have you join me here this morning as we take a look at the market and try to find some good opportunities. You are absolutely welcome to ask questions as we go along here. So make sure you can find that chat box in the Zoom webinar platform. Go ahead, find it and type in where you're calling in from. It's always fun to see, city, state, country. We typically get people from all over the United States, Canada, and all over the world quite often. So go ahead and make sure you can find that, and that'll just be pretty fun. Well, we still got people getting logged in here as we get ready to start. And while you guys are finding the chat box and typing it in there, I'm gonna go ahead and show you one of the trades I found. Yeah, I woke up early this morning, couldn't really sleep. So I thought I would get a jump on this, take a look. And here's the favorite trade I found this morning so far. Colgate Palmolive long. And so this looks like it could be a decent trade. And so I'll walk through what my criteria is and how I go about finding these, but thought I'd just give you a little preview of one of the good trades that I like potentially to take next week. So that would be a long on Colgate Palmolive, and they reported earnings on Friday, and they were up while the rest of the market was down. So I like that setup, and I like that sector too right now. So that's just a little preview. All right. So let's go ahead and get things started here. So, we're here on a Saturday morning. We're going to be scanning for some good trades. And, I like to say it's true, right? Finding great trade candidates can be like finding a needle in a haystack, right? There's over 8,000 publicly traded equities on the U.S. markets, and then hundreds of ETFs. When I do a full scan with the tools and TradeStation, it ends up scanning over 10,000 symbols. That's a lot. You can't go look at all those charts, right? So we got to figure out a way to narrow that down. And so that's what I do, and we're going to walk through that. All right, I'll show you how I do it, and I'll share some of the trades that I find, and I'll extend an offer toward the end of the session here if you want to follow along with me. We have a trading room that runs Monday through Thursday. I have a stock pick subscription service. So if you want to follow along, there'll be an offer to do that, pretty low cost trial to jump in and see which of these trades and other ones we take going forward. All right, I'm a trader, not a financial advisor. I'm not giving financial advice. I'm going to be looking at some live trades in the live market. But again, I'm not giving financial advice. All trading and investing involves risk, and risk control should be used at all times. And I'll share my approach to risk control. Let me do a quick introduction. I know some of you got invited here or saw something on YouTube or Facebook or something, and you may not know me. So, hey, I'm Dean Jenkins, founder of followmetrades.com. I'll flip my camera on for just a moment. Good morning, glad to have you here. And again, I'm Dean Jenkins, and I'll tell you a little bit about my story here. I started trading and investing over 25 years ago. I worked for Intel Corporation. It was a great experience, and they gave us, a stock purchase, employee stock purchase, and some incentive options. And I started in '93, right? Really, as we ramped up to the .com bubble, and man, pretty soon those were worth a lot of money. And I got, it's like, wow, this has my attention. During that time, I went and got my MBA from the University of Washington, and for a number of years, I was a fundamental trader. In business school, I learned how to analyze, company financials and did all that. Really got mixed results. It's pretty frustrating, right? We get some winners, get some losers, and companies that should be good don't do well. And companies that don't look so good end up going up for some reason. So I totally gave up on the market about 2007. And that was just pure luck. The market crashed after that, and I was in cash. Back in because there was just, I just couldn't stay away. It was too interesting in the market. I really enjoyed it, even though it was frustrating. And after the 2009 crash, I got into some trades like Bank of America and some others, right, that were just super low priced. And, I got into Bank of America at $5. It went to $12, more than doubled. And, but it was stressed out because I didn't have a trading plan. I didn't know how to manage that. Right. And you have that tension of, well, if it's going to go higher, I don't want to miss out on that, but I don't want to give back the profit that I already got. And, it's just stressful. I got interested in about 2010 in technical trading, analyzing charts, made a bunch of mistakes, went down a lot of wrong paths and, bought a bunch of indicators like a lot of people, but I finally, settled in about 2012 and got some good guidance, some good mentoring, got the right tools, made it simple and learned risk control, which is the key thing. And so about 2012, I settled in on the basic system I'm using now, started getting consistent results. A couple years later, I launched followmetrades.com. So I do coaching, mentoring, and have a stock pick subscription service. So that's just a brief introduction. I'll turn that camera off now so it's not a distraction, and we'll carry on. And again, I know some folks are still logging in. By all means, feel free to jump in with any questions that come up here during the session. All right. So here's how we'll run this morning. Right, I'm going to explain the trade setups I'm looking for, because if we're going to scan the market, we got to have some criteria. Then I'll walk through my scanning technique, how I go look for, narrow it down from 10,000 symbols in the U.S. equities markets down to a manageable number. Then I'm going to try and find some great trade candidates, and I think they're out there. I already previewed one that I found this morning, and I'd be happy to analyze anything you're looking at. So toward the end here, I'll open that up. You can type in any, whatever stock or symbol you're interested in, and I'll offer my feedback using my tools. And I'll summarize the trade candidates at the end. We may have some actionable trades for next week. And I'll have an offer if you want to follow along in my trading room and my subscription service on an ongoing basis, if you like what I'm doing here. All right. And Hani, I hope I pronounced your name right. What's the benefits of learning to trade for a BBA student? Not sure what a BBA student is. But the learning the basics of trading, is really the same for everybody. And I'll walk through, kind of my basic approach here. Maybe you'll find that helpful. All right. Business administration. Yeah. So the basics of trading are the same for everybody. So take a look at what I'm going to show and see if that's helpful to you. All right. So I love quotes from smart people, as they apply to what we're doing here. I like this from Benjamin Disraeli. He said, the secret to success is to be ready for your opportunity when it comes. And so, for me, being prepared is to have a trading plan and to know what I'm looking for in the market, what I want to see on a chart that would make me want to trade it, rather than just headlines and, gee, Apple's a good company, maybe I'll trade Apple, right? That's not really a trading plan, right? And Louis Pasteur, in the field of observation, chance favors the prepared mind. Again, having a plan, having some criteria, know what you're looking for, and then apply that filter when you go looking. All right, here's a couple things I've learned about successful trading, right? To be a consistently profitable trader, right? And I've been doing this for years, and I had, like many people, there was, early on, I wasn't consistently profitable. Then I turned that corner. So you got to have a plan, right? And here's the things that are essential to that plan. You got to have great trade setups. You got to have some criteria that you're looking for in a trade, and rather than just a tip from a coworker or neighbor over the fence or a headline you saw. It's important to have objective criteria for a trade. And that setup, that criteria has to have a high probability outcome, right? You got to have an edge, a proven edge, and then. For me, it's important to have a good reward to risk ratio on a trade, meaning if it wins, I will make more than I will lose if it fails. Pretty simple math. You got to have risk management, a way of controlling risk, because some trades are going to lose and we want those to be very small. And then you got to have a well-defined system of managing a trade once you're in it, so that you don't make decisions based on emotion or intuition. You make decisions based on a predefined script that is proven to provide good results over time. That's the goal, right? So that's what I've learned about successful trading. Here's some tools I use for the setup. And again, there's many different indicators and ways to analyze charts, analyze the market. The ones I use are by no means the only ones, but I've found them to work for me. They make sense to me and to many of my customers and students, right? So I use Dow theory for trend analysis. I use the Ichimoku Cloud for trend confirmation and support and resistance areas. And I use a very simple, repeatable version of Elliott wave, looking for impulsive or corrective waves. Overriding criteria, again, is I want a high probability outcome and a great reward to risk ratio. Dow, Ichimoku, Elliott are all completely independent studies and analyses. So when they agree, that's pretty powerful, right? I'll show you on a chart what that looks like. But so let's walk through each of these in a real quick, simple way, right? So Dow theory, Charles Dow, founder of the Wall Street Journal and Dow Jones Company. Part of his theory was discussing trends, right? And saying, what is a trend? Well, a bullish trend is a series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. And as long as that pattern continues, you're still in an uptrend. And a downtrend, a bearish trend, is lower lows, lower highs, lower lows, lower highs, so on. Well, that's important because when we get into a trade, say we go long and it goes up into profit, right? It creates tension. We got to, that idea that I want to stay with this trend if it's going to keep going up, but I don't want to give my profit back if the trend is over. I don't want to, ride it back down to zero. So having a definition and a rule like this helps you stay in a trend, right? Because as long as, because price does not move straight up, right? So as long as price goes up and then a pullback stays above the previous low, right? You're still in an uptrend. And you can use these to then put your stops, right? Where would I exit the trade? Well, the trend's over when these lows are taken out. So that's pretty cool. Works like this. A trend is proven with 3 data points: a high, higher low, new high. That's the beginning of an uptrend, and an uptrend continues as long as it keeps putting in new highs and higher lows. Downtrend is the opposite: low, lower, high, new low. Downtrend begins, lower lows, lower highs, lower lows, lower highs, until prior lower highs are taken out by price. That's when the trend is over. So we can't call the absolute top of a trend, but we can tell when the trend has changed and when it's time to boogie, take our money and close the trade and move on to the next one. All right. I see someone has raised their hand in the Zoom platform. Just go ahead and type in a question if you have one, then I'll try to address it. All right, so that's Dow theory. One of the tools I use, here's Ichimoku Cloud, right? It's the shaded indicator that you can see here, and then there's yellow and purple lines, Tenkan Kaijun lines. Ichimoku Cloud is just a different way of looking at moving averages. And I use some unique settings. When you see them on my live charts, if you've used Ichimoku Cloud, you will see that it looks nothing like the default settings in your trading platform. And I'll tell you about how you can get those settings and apply them if you're interested, right? But the idea here is we got Dow theory, high, higher, low, new high. If that occurs and price breaks above the Ichimoku Cloud, that is really a really strong indication of a trend beginning, a new trend. Well, that's what we want to get into, is the beginning of new trends. And we can also see that the thicker the cloud is, the more support it is projecting for that trend. So you can see these higher high, higher lows, right? The cloud is saying, the Ichimoku Cloud is saying, yeah, that's just part of the uptrend, right? That's just, the wider the cloud is, the stronger it is, the less likely it is for price to break through it, right? So that's helpful. And then Elliott wave, very simple, repeatable version of Elliott wave. We're just looking. So Ralph Nelson Elliott developed this back in the 30s, which is interesting. It was the same time frame that Goichi Hisada was working on Ichimoku Cloud. And here we are, 80 years later, still using the thing, right? It still works 80, 90 years later. Still good stuff, right? But what Elliott said was, hey, it looks like price moves in waves, right? And that there's a collective investor psychology, right? And that when news comes out, information comes out, right? There's a crowd psychology. People start joining the trend and drive it up in this impulsive wave 3. And at some point, there's going to be profit taking and a shift, and there's going to be a correction into a 4. And then typically it will resume into a wave 5. So we use wave 1, 2 to confirm the trend. I'm only trying to trade wave 3, 4, or 5. And then there's typically a complex correction afterwards. This ABC, those are really hard to trade. So, there's so many symbols out there. Why not just look for good, clear, easy setups, right? A new impulsive trend, a correction after a big trend, or a continuation of the original trend. So that's it. Just trying to keep it simple. Okay. A few words on risk management. No matter what your indicators are, I've shown that I'm using a handful of them here. You may use something different. You may like RSI or MACD or whatever. Those can work. But risk management transcends all trade setups, right? When you go into a trade, you gotta determine how much you're willing to lose on the trade, and then make sure that if it goes wrong, right, you control it to that acceptable loss level, right? It has to be a pain-free level that will not be a setback. So I use 2%, and a lot of people confuse that with saying, oh, you put 2% of your capital into a trade. No, what I'm saying is I'm not willing to lose more than 2% of my account on any given trade. I may put more capital. I'll put up to 15% of my capital into one trade, but I'm not willing to lose more than 2%. So I establish a stop level based on Dow theory, based on the realities of price movement, and then I figure out, based on the entry and the stop, how much capital to put in the trade so that I would not lose more than 2% at that stop. I'll demonstrate it on a chart. Okay? But risk management, got to do it. You got to manage trade once you're in it, right? That includes taking profit at the right times, adding to the position strategically. Sometimes there's a case for when you can add to a trade without increasing risk. It is not doubling down or dollar cost averaging in. There's a different formula for that. And you got to stay with winners, right? There's the real temptation to, you jump in a trade, it goes up a little bit, you jump out, scalp it, right? You're going to undermine your profit that way, because losers typically go hit the stop. Now, if we got small losers and then we have small winners, we're going to be break-even traders. So what we need is small losers, big winners. And so you got to have the discipline to let winners run. And then we got to exit the trade when the trend has changed, right? And I use Dow theory for that. So here's what it looks like, right? When price starts, right, when we get a higher high, higher low, come up, we're going above the cloud, take a long, put the stop under the previous low, and then as higher highs, higher lows, higher highs, higher lows are put in, we trail our stop up to the new higher lows, up to the new support levels, take incremental profit along the way, scale out a third, scale out a third, let the final run into the target and beyond until the final stop's hit. Okay, so that's a quick overview of the tools I use. And I said I found a good trade this morning, woke up a little early, and so I'll start looking at the market before the webinar starts, right? So here's a Colgate Palmolive, right? And here's the kind of the tools and the analysis in action, right? Bringing together Dow theory, Ichimoku Cloud, and Elliott wave. So you can see, here is a wave 1, 2, this is all 3, this is 4, and it looks like 5 is starting, right? We want to see it go up into a target zone. Now, if you just look at this shape that I just drew, and I did this, right? I just compressed it. That's the shape that this chart is making. That's the pattern that it's making. And that shape is Elliott wave, right there. That's that shape, right? So that's what we want. That's the good stuff, right? So I'm looking for that on a chart, and on Colgate, I found it. Now we can also use some tools, right? Because I told you that this was wave 1, 2, 3, 4, and 5, hopefully going up, right? We want to make sure this pattern is conforming to some rules for Elliott wave. Like the first thing is that wave 4, was that correction adequate? Did that meet the the definitions of an Elliott wave 4? It did perfectly. We want to see a correction into this Fibonacci retracement zone, which is 38.2 to 61.8 Fibonacci retracement, right? We want to see price go under the Ichimoku Cloud. We want to see our oscillator turn negative. That all tells us that that was a true correction, not just a lower high, lower low, or higher high, higher low, right? That was a real correction. That was a real wave 4. And now we want to see wave 5. Well, what do we want to see? We want to see Dow theory in action. High, higher, low, high, higher, low. Looks like it's going higher. We're above the Ichimoku Cloud. The oscillator, the momentum oscillator, price oscillator, has gone positive. That tells me this trend is changing, and it looks like the next impulsive move up is very probable, not certain, probable, right? There's no free lunch in Wall Street, no guarantees. We work off of probability. But if this is correct, we got a target zone on Colgate Palmolive up between these green lines, a Fibonacci extension of 61.8 to 100%. And, we know price doesn't move in straight lines, so it's going to work its way up, probably in a series of higher highs and higher lows like that. All right. So that's what we're looking for, a setup like that. This one really looks good to me. And I know that they announced earnings on Friday, so I don't have to worry about an earnings announcement for a whole quarter. So that's good. I got 3 months really to let this trade run. Okay. So Hani's asking how is it that this pattern is good? Well, it's a known pattern, and if this chart, this company has been following this pattern so far and conforming to the parameters of this pattern, then there's a high probability it will continue. So that gives us an edge, a probability that this will go up. That's what we're looking for, is an edge. All right. So using Dow theory, I'm going to apply some risk management rules. I'll expand this a little bit. So I'm gonna put a stop. This is where I would exit the trade, right here, under this low. Because if price goes down through this, according to Dow theory rules, the trend is over. So I'm gonna put a stop there. I'm gonna make this line red. And that's, if I take this trade Monday, and I might, right? I'm gonna take it, hopefully it opens somewhere around the current price, which would be here, right? I'll just make this blue. Make it light blue. Okay, so there's my entry, there's my stop. And I'm going to calculate my position size based on the difference between these. Because my entry, say it's about 80.75, and my stop is at 78.35, right? That's about a $1.50, $1.75 difference. So that's the amount I will lose per share if we hit the stop. And so then I go, well, how much am I willing to lose on a trade? Say it's 500 bucks. Well, I divide $1.75 into 500 bucks. That tells me how many shares to buy. Right? Hope that makes sense. And then I go, what's the target on this trade? So here's the bottom of the Fibonacci extension zone. It's this green line, and we see wave 3, the prior high was there. A lot of these charts have a tendency to stall at that prior high, have trouble getting through it. So let's call that the target, right? It's a conservative target. It could go higher up into this extension zone. But let's be conservative, right? Because if it looks good at a conservative number and it goes higher, that's great. We'll make more profit. So the green line is the target, the blue line is the entry, the red line is my stop. Now I look at the difference between here and here and here and here, and you can see this is about 2 to 1 or a little bit more, right? That's a good reward to risk. If I win, or if I'm right and I go up here, that's how much I'll make per share. If it fails, this is how much I'll lose per share. This is my reward. This is my risk. This is a good ratio. That's what I'm looking for in a trade. Right? All right. So that's CL. That's how I apply those tools to a chart. All right. So let's go look at the market and see if we can find some other good trades. Right. I'll show you how I scan through 10,000 symbols and get down to a manageable list. Right? I walk through these steps. I do a big picture review. I just step back and go, what's going on in the market right now? right? Then I create a thesis or an area of the market to go focus on. And then I, depending on what my thesis is, I use some different tools to scan it down, but I'll show you how we did it today. Then I go look at, look at 10 or 15 charts and see if I can find a couple good setups, right? So I'll show you how I did that. First, let's look at the big picture, right? And, the indexes are at record highs, but we got a little short-term pullback, and the market did not like that noise that the administration made about raising capital gains. That was not well received. And here's a chart of the S&P 500 daily chart. And you can see, look at the current price. Last week we went on and put in a record high and a record high close up on Thursday. But boy, look at the narrow width of these candles. You compare it to prior movement on the S&P 500, right? It's up a percent or 1.5% a day, up or down, up or down. Right? These were incredibly narrow. These little red crosses are actually called dojis, where the open and the close were very, very close together. And even the range during the day, the high and the low, were very tight. So it looks like it's kind of losing momentum. And that's on the backdrop. And the NASDAQ looks the same way exactly. This is the S&P 500. Here's the NASDAQ, the QQQs, right? Exactly the same, just sitting there chopping after putting in record highs. All right, Joel's asking a good question, or Joe, sorry. Joe says, hey, do you trade inside the cloud or only above for long, below for short? So I have a handful of indicators and studies, right? And the ideal trade, like here on CL, is when they all agree, right? We got a good wave count. Dow theory says it's going up. The price oscillator says it's going up. You see, I got some moving averages. We're above the 200-day moving average, and we're above the Ichimoku Cloud. So the more indicators that agree, the better. But if one of them doesn't, but everything else is really strong, I may decide to go ahead with the trade. And it could be that, if it were still down here in the cloud, hadn't quite broken, but everything else was screaming that it was a great trade, I could still take it. So one indicator, I don't lean on any one to qualify or disqualify. I look at the collection of the entire picture that's being told with price action and some important studies. So I hope that helps. All right. So what is the big picture in the market right now? All right, indexes at record highs. We got a little short-term pullback or sideways. Infrastructure spending is going to be a big deal. There's lots of proposals out there, big ones and medium-sized ones, but that's not going to happen until this summer later, right? It's a lot of noise right now, and it will be important when it happens. The FOMC had an important meeting and update last week, and they're standing pat. They're not going to raise rates, and they will tolerate some inflation, more so than they had in the past. So they're going to stand aside and not mess with rates for now. We had some really strong economic reports last week. GDP, personal income spending, employment pictures looking better and better. People are spending money, and incomes are going up. And those were really strong numbers, really surprising numbers. And it was really interesting that the market shrugged them off, really. The S&P 500, as these big numbers and good numbers for the economy came out, kind of went flat. That was interesting. We're in the middle of earnings season. We're getting some positive results overall, but the expectations are sky high. And companies that report well, some of them go up a little bit, like the banks led off, right? They had great results, and they're up 1 or 2%. Amazon and Google did really, really well. Amazon was up, added a few more billion to Mr. Bezos's net worth. Amazing. But the expectations are super high. Anybody who shows any weakness, like Netflix, gets absolutely hammered. So that's where we're at. And gold is starting to try an uptrend, right? And you just wonder, are investors seeking safe havens? Kind of look like crypto might be that, and then it got hammered. People are thinking about locking in gains, particularly if they're worried about a capital gains tax. Maybe I should, take that gain now at the lower rate before things change. Is there some sector rotation? You hear analysts talking about things coming out of tech, maybe going into consumer cyclical, and also, what about sectors that were really decimated by COVID? Airlines, cruise lines, travel, hotel. Are there some opportunities there? Maybe, right? And there's always, the fear of missing out. People don't want to get burned. So my conclusion is, I think more so than sectors is what I'm finding, that individual stocks, short-term plays are really the focus. Is we'll watch the indexes, and if they show weakness and start correcting, then there could be some huge opportunity to the downside. Right? You can make a lot of money in a market that is dropping quickly, and the market, when it corrects, it goes faster. It takes the stairs up and the elevator down. Right? So, given this big picture, I ran a scan, and again, I'm looking for individual trades. So what I wanted to do, I'll show you the scan I ran. It's TradeStation. Using their scanning tool, all platforms have something similar to this. So what I said was, I want the price of a stock to be above $2. I don't mind trading low priced stocks. I don't want to trade penny stocks. So $2 or above. I want the volume. I want something that's highly liquid, right? So I wanted the volume to be 1 million shares per day on a 10-day average or more. I want the market cap to be 1,000 or a billion, right? So at least $1 billion in market cap. So these get me to the point of, these are real companies, right? These aren't low float, tiny companies, right? These are real companies with real volume. And then I said, I want price to have crossed the 200-day moving average less than 3 days ago. That tells me something new is happening. When it crosses an important line like the 200-day moving average, right? That tells there's something new is happening. And I want it to be within 5% of the 200-day moving average, because if it gapped up 50%, then it's run away. It's too late. So I went ahead and I ran this scan. It went through 10,000 symbols and came up with 39 symbols that met that criteria. That's a manageable list. And so I took that results of that scan, I put it over here on radar screen, and now I can look at a couple indicators, right? I can see where it's at relative to the 200-day moving average. I can see how many days since it crossed, and I can see where it's at on the Ichimoku Cloud right here on one screen. And now I can choose, I can kind of prioritize which symbol I want to go look at now. And Romana is asking, can you get the recording? Absolutely. As long as the technology does not fail us, I'm recording this, and within an hour or two, I'll get the recording sent out to everybody who registered. All right. So I just sorted this on the Ichimoku Cloud indicator, right? And I was like, hey, some of these are new, right? This one just went below the Ichimoku Cloud. This one just went above. New is good. It crossed the 200-day moving average 1 day ago, and it crossed the Ichimoku Cloud. Well, that's important, right? Something new is happening. Now I can just click on this symbol, and it's going to load it onto my chart. Here's the first one, plan. And it actually crossed down, right? Went below the Ichimoku Cloud. It went below the 200-day moving average. I don't like the trade, and here's why. After you've looked at a few thousand charts, you spot this pretty good. So this, remember, it's down. So this would be a short trade. It's below the cloud. It's below the 200-day moving average. So it would be a short trade. Here's the impulsive move up. Here's the correction. It already happened. Right? The correction already happened into the Fibonacci retracement zone. So this is actually looking like it wants to start wave 5, but it's nowhere ready, right? It's still below the cloud, the moving averages. So, it's something to watch, but there's nothing there. That's all right. CL. Oh, remember CL? This is where I found it. This is a nice setup. And this is above, right? Newly above the Ichimoku Cloud, newly above the 200-day moving average. Oh, right. Nice wave 1, 2, 3, 4, 5 starting, higher, high, higher, low, positive momentum, above the cloud, above moving averages. Everything looks good. And they've already reported earnings. So this is on the top of my list for Monday morning. Might just execute that trade. And this is exactly how I found it on that scan. All right. How are we doing for time here? We're good. look good. So I went through some of these earlier this morning. Gold mining company. Newmont is a watch, right? It's a little choppy back here, but overall, this is a 3, 4. Looks like it's starting 5. I would like to see it turn, right? Get back above the cloud, and then we could maybe have a good long entry on this. So that's worth watching. Newmont, that was off that list. Overstock was on there. Where is it? There it is. That's a long trade. Look at these wicks. This is interesting. Hot. So here's big 3 up, 4 correction. It's trying to get a new trend going. And in the current series of weeks, really interesting. Look how it puts in these high, higher, low, high, higher, low. It's choppy, but that, you know, you can trend line that, right? That is a upward sloping kind of channel right there, right? The top of it's doing the same thing. So not the cleanest thing in the world, but if it reverses here, right, we got an uptrend and it could break out of this up into the target zone. So that's worth watching. That's an interesting symbol. Plug came up, I believe. I've always been interested in Plug. It's an interesting company. Yeah, there it is. Make hydrogen fuel cells, right? So they had a huge run up from last summer, you know, from $5 to $70. That's huge in my book. Pretty good correction, but again, that's a wave 4, and it looks like we could be getting ready to start wave 5. It's a little early to call that, but we got a high, so far a higher low. And if we can break out of this into this, right, this thing could go from 30 to, you know, 60, could double. That's very realistic. So that's interesting. So Plug came up in that scan. Actually found a short, another mining company. So Newmont was a potential long. Core Mining, CDE, must be up by Coeur d'Alene, Idaho, I would guess, right? So you got this big upsloping trend, and now look what happened, right? This was all higher highs, higher lows, higher highs, higher lows, tightening. All of a sudden it broke, right, into a low, broke through the cloud, the 50-day moving average, 200-day moving average, momentum turned negative. What's the target for that correction? Yeah, it's kind of in the zone already between these blue lines. So there may not be enough profit left in that one. Unless it goes up and reverses, and then you could take the next leg down. Quite often these corrections are in an ABC move, so you got to let that develop and see. I also use artificial intelligence tool, and I ran a quick scan over there, and the prediction in the AI tool was for a downtrend in Goodyear. And here it is, low, lower high. So this is looking like it could actually start to correct. So I was glad to find this one. And the target on this is in this zone here. So this could be good, right? A good short on Goodyear, right? We would put our stop here. We would put our entry, let's say, you know, if it's close to that price Monday at the open, we would take that entry there, and we're going to have a target in the middle of this zone. That's about a 3-to-1 reward to risk on that short on Goodyear tires. So I like it. All right, so those are some of mine that I found. Colgate Palmolive, Newmont, Overstock, and a short on Goodyear. Those all look good. And there's a couple existing trades that we're in. We're in PayPal. And I think this still looks like a good trade. New entries look good. All right, we've got a target on PayPal up about $300. And it looks like it's getting ready to reverse. I would only take that if it goes up over the next couple of days. All right, if it does reverse off this support level and go up, then there's a good entry and a target up around 307. So that looks pretty good to me. All right. So what symbols would you like to look at? I'd be happy to use this technique that I've been showing you and analyze anything that you're interested in trading. I'll just type it in there, offer my feedback. go ahead and type that in the text block. Rich would like to look at Ally, A-L-L-Y. All right, Ally Financial. Well, it's a beautiful trend. And look how long it's been going on, since March of last year. So for over a year, this thing has just marched upward like a soldier. So it's beautiful. For me, the entry was back here, right? I don't chase a mature trend like that. And notice here that the momentum, even though the trend is heading up, right? The momentum is coming out of this. It's called bearish divergence. All trends correct at some point. So if you're in it, that's great, stay in it. But I would not take a new entry on that at this moment myself. Rich Romana, PLTR. So it's obviously a fairly new issue, IPO'd back here, big move up. Here's the correction. So how does that correction look? It was in the zone, it was good. So what you want to see here is evidence of the new trend beginning. Now you do have, so remember, a downtrend is, this was the correction, this was a downtrend, low, lower high, low, lower high, low, lower high, low. That was the downtrend. What happened here? High, higher low. It did not go below here. So that's new. We need a third data point. We need it to go up, right? High, higher, low, new high. If it goes above here, you could have an entry. And if you do, if that happens from here, then the extension on this one would look something like going to new highs up here, 42 bucks. That could be a nice trade. For me, gotta wait and make sure that this uptrend is confirmed. Ideally, it would get above the Ichimoku Cloud, right? And there's time. They've got a big target, so why not wait and make it a high probability trade rather than trying to jump early when it's not high probability. But that's an interesting one. Emma would like to look at Square. All right, Emma. So we had, this was kind of like that first one, Ally, except this one has corrected, right? We had a low, lower high, new low. Let's see if the rules for the correction were met. It looks like they were. Pretty good. It came down to the target zone, low, lower high, under the cloud, under the 50, oscillator shifted. So now we got a high, higher low. All we need is a new high, and then this one could be taken off too. So we just need to get above here, right? And then it's going to have a big target, so it's worth waiting for. And so, and it's important to wait, because these corrections, can go on for a long time. It could sit there and go sideways, but once it breaks out, then the probability of it continuing is pretty good. And the target's 338 to 429, big target. So it's worth waiting. So that's the story on Square. All right. I see a couple hands up. I'm just going to lower those. If you got a question, just type it in. That's easier. All right. So Jeff would like to look at Amazon. We'll do that. All right. Amazon, up and away, right? It actually closed down a little bit. They had big earnings, right? It is in a wave 5 right now. It did have a little correction here, and so the extension for Amazon is up above 4,000, right? And it's clearly started high, higher, low, high, higher, low. Trend has begun. Long trade is on. Midpoint 4,400 bucks for wave 5. That'll take time, right? Won't happen in a day trade. Take weeks to a few months to do that. Maria, BHP. So BHP, you can see we had analyzed this at some point in the past. There was 3, there was 4, wave 5 target. It went higher than the target. It was good. Now we're in this complex correction. This is hard to trade. So the high probability, easy to trade, easy to win thing on this one is over. And now it's in this complex correction. It's difficult. So I would find something that isn't in that kind of zone. It was a good one, not anymore, my opinion. All right. Let's, I told you that I would make you an offer to be able to follow along with me here going forward if you're interested. And let's take a look at that, right? So remember, finding great trade candidates can be like a needle in a haystack, but we found some good ones that I think look good, have some real potential. Remember, any trade, you need a good trade setup with a high probability outcome, good reward to risk ratio. I've explained that. Risk management, trade management. You got to have all that to do well. So do you guys agree? Do you believe that having all three of these trade setups, risk management, trade management, will help make you a profitable trader? Go ahead. Now you can raise your hand or just type in yes, right? Click that raise your hand button. What do you guys think? Yeah, there's a hand up, couple hands up. Yeah, a couple folks typing in yeah. Yeah, I mean, it's hard to disagree, right? These are pretty simple things, right? You got to have setups, risk management, trade management, right? How many of you are excited about some of the trades? I'll lower your hands, right? So you can start over fresh here, right? How many of you are excited at some of the trades we just looked at? Colgate, Newmont, Overstock, Plug, Goodyear short, PayPal. Yeah, a couple hands going up there, a couple people agreeing. Yeah, I think these have some real potential. But maybe you're excited, but you're just not really sure how to act on them, right? And I presented a lot of information. Maybe you feel like this guy here. It's like, whoa, man, I'm drinking from a fire hose. That was crazy, right? But I'm interested. All right. So I'll go over a special offer for you here. Spend a few minutes so you can follow along, right? So I have a stock pick subscription service, right? And in this service, I offer all these things, right? Great trade setups. I find them, and I continue to show you how to do it. And many people learn how to do it on their own. I offer risk management tools, trade management guidance and tools and alerts. You get up to 10 hours of detailed trade consultation per month in the trading room, and one-on-one. And ongoing education and tools, right? And I help you, we find winning trades, right? We have a profitable service here. And, getting that stuff individually, if you were to go buy, the mentoring and all that time, it'd be thousands of bucks, right? But that's, this offer is not for thousands of dollars, right? The list price of my service is $127 a month, $1,500 a year. It's a good price at that, right? Because we're consistently profitable year after year. I got a special offer for everybody here today. You can try my stock and option pick service, $37 for 30 days. And I will go ahead and post the link into the chat box. There you go. There's the link. All right, 30 days, $37. It's $97 a month after that, which is a 25% discount off the list price. And it's 100% money back guarantee. Right? If you sign up for the service and during that 30-day trial, most people go, yeah, man, this is great. I'm in. I'm going to stay. But if for some reason it's just not working for you, you just send me a note. I'll send you 100% refund, no questions asked, no hard feelings. It's not for everybody, I just think that's the way we should run businesses, right? So 30 days, $37, 100% money back guarantee. And that link is in the box. And what do you get with the service, right? Here's everything you get. You get a watch list of potential trades that I found, just like we did today. You get alerts when we're going to take a new trade. They come out in email, and I have a dedicated app that will give you an alert on your phone. You get the exact details of the trade, the entry, the stop, target, like I demonstrated. Most of the trades can be traded either with shares or with options. I provide a suggested option contract. You can trade it either way. It's your choice. It's your money. But I provide tools to help you calculate the number of shares or contracts, right, to follow the risk management guidelines, right? You get alerts when we're going to make a change, email and the app message when we move the stop, take profit, close the trade. So updates through the life of trade. You have access to a live trading room, 30 minutes after the market open. You can attend if you like. It's not required. You're going to get the alerts and the trades, and you can act on them no matter what. But some folks really enjoy, an interactive session like this where we analyze the market, analyze trades, and answer questions. So that is available 4 days a week. There's also a weekly live chat session on Wednesday evenings where we do a similar thing. It's just for those who have day jobs, can't make it in the morning. And when you sign up, you get an invitation for a one-on-one consultation with me, just to get you off to a good start, get acquainted, answer any questions. And that's, again, optional, but you get that invitation. And you get some risk management, option trading tools, and training when you sign up, right? I've got some videos, I got some spreadsheets, and, walk you through it. Keep it all simple, right? And of course, ongoing support and training. I get really pleased to get feedback that customers are very happy with the level of customer support that we provide. In fact, you can go read any of my website pages in the bottom. So here's my homepage, followmetrades.com, right? You can read more about this service in the company. But in the footer of every page is a Better Business Bureau seal. Right? We got A+ rating, and I'd invite you to go visit that and read the reviews. And so the BBB, I mean, they make sure these are real, right? I'm just totally humbled and pleased by the reviews that people are posting here, because it's been really good, and we just do our best. All right. So here's what you get with the service, and but wait, there's more, right? You saw that I use Ichimoku Cloud. I have a set of proprietary settings for Ichimoku Cloud and how I approach that, right? I have a course on my website for $247, right, that would teach you how to use Ichimoku Cloud. If you sign up for the trial today, $37 trial for 30 days, I'll include the Ichimoku Cloud course for free as a bonus. So there's the link in the chat box again. And that is it. Happy to take any questions that anybody has. And I certainly, I want to thank you. I sure appreciate you being here on a Saturday morning, taking the time. I hope you found it valuable, and I'd love to have you be part of the service. All right, so that link is in the chat box, and I'll go ahead and stop the recording, but I'll hang out and take any questions that you have. All right.